Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Tuesday, July 25th, and then we'll see how things look for Wednesday, July 26th. We had another up day. Things are still looking positive, but we are overbought. There are some different areas of weakness that could be creeping into the market, but if we have a good solid up day, it could take care of that, or if we see more downward movement, that could also build upon more of a negative picture. Today is the big day that we're waiting for the Fed to make their announcement, not so much what they're going to do, but more of what they're going to say. So let's go back and talk about what happened. The S&P and the Dow each hit 52-week highs intraday on Tuesday. The Dow's been doing that many times in a row now. In fact, it's had 12 straight up winning sessions. Mega cap stocks did outperform the rest of the market. Earnings reports that were released were mostly taken as positive. And just as another note, the Teamsters and UPS reached a 5-year tentative collective bargaining agreement, hoping to avoid some kind of a strike. And then, is there some weakness that's developing? And I go through this more in the full-length daily video if you want to check that out. The positive scenario that the market has latched onto still continues. The idea that we'll have a soft landing, meaning we won't go into a recession, that the Fed is almost done raising interest rates, and that looking forward, earnings growth still looks good. Now, this can change at any time, and it might change as soon as Wednesday, when the Fed has their press conference. We'll have to see what they say and how the market reacts to that. On a short-term basis, we have a long list of overbought indications, including our moving average study, the Williams percent R, the CCI based on 20 periods, the standard deviations chart, the stochastics, and the RSI based on 9 periods. Intermediate term, we also have a pretty long list of extreme positive indications, the rate of change going back 50 periods, the PMO studies, the oscillators. They're actually turning more negative now, not so much of a negative divergence, but we're seeing some of them roll over. Our Sean trend meter, and then the BPI for the S&P 500 as well as the NASDAQ 100, and we're keeping an eye on the NASDAQ 100 as well, and then the RSI 14 period. Long term, we still have our 150 and 200-day moving averages that are looking a little extreme. The dollar was up and interest rates were also up. All of the yield curves still remain inverted. Sentiment is still extreme positive at 81 where it had been at 82. Our trend is positive. The green line's turning back up. We're getting close to 40 on the ADX, so that's looking a little extreme, or you could say that's showing good momentum. The ADX is above its moving average, and again, both of them are above 20, so that's keeping our bias at positive and our momentum at positive. The economic reports that came out, we had the FHFA Housing Price Index. It came in up 0.7%, the same as last time. The S&P Case-Shiller Home Price Index was down 1.7%, less than the minus 1.9% they had expected, and the same as what we saw last time. Consumer confidence ticked up a bit. It's at 117. They expected 111.5. Last time it was at 110.1. If you look back a year ago, it was at 95.3. Keeping an eye on the Fed. As of right now, the close on Tuesday, there is a 98.9% chance that the Fed is going to raise interest rates 25 basis points. Now, if the Fed doesn't end up doing that, that's going to spook the markets a little bit. It's not so much what they're going to do, it's what are they going to say at the press conference after that could really have an impact on the market. This is showing the recent probabilities where it really hasn't changed. The blue area is where we're at now. This is a day ago, a week ago. We have gone up since we saw this a month ago. Looking at the intraday chart, we had a higher open. We made it up to R1. We eventually made it up to R2, got a little bit above that before we saw some selling coming into the close, and we closed just a little bit above R1. We are showing a little bit of improvement with growth versus value for the S&P. We're above the dashed line, so that's positive. Looking at our trend, the ADX is getting close to this 40 level. That's the black line. It's above its moving average. The green line has also turned back up, so we default to the positive. Here's a shorter term look where we're already over 40 with the ADX and the moving average, and the green line is also turning up. Here's the daily chart where we came up to the underside of this trend line, came back down. We're now starting to go back up. If we see some positive action, will we go back up to this trend line or will it act as overhead resistance? On the bottom, we can see where volume dropped to below average. We're seeing a new signal with the Pring bottom fisher. It's crossing above the red line now. Typically, we want to see this deeper. That means there's more of a washout or a selling climax of some kind. And then this will usually trigger some kind of a buy signal. But just the fact that we're crossing over positive is a good indication. We're also keeping an eye on the 61.8% retracement level for the NASDAQ. We're still above that level now. If we see some weakness, will that support level hold? Also, we're keeping a close eye on the NASDAQ 100. We came up to this R1 level. We've been coming back down. We bounced back up a little bit in Tuesday's session. If we see some weakness, will the August 2022 highs hold, or are we going to break down below that? Or if we see some strength, are we going to be able to get back up and get above these pivot levels? We're also watching the negative divergence with the PPO on the NASDAQ 100. We were making a higher high based on price, but a lower high based on the indicator, and we've dropped below the moving average, so this is actually turning more negative. We're also looking at the FANG index, where we set an all-time high recently, and then we fell back down below that. We were up almost 1% on Tuesday, but we have a ways to go to get back to this all-time high. Then longer term, the S&P weekly chart, we're still dealing with this resistance level. We're above it for right now. Can we stay above that and then go higher, or is this going to act as resistance and break lower? We're seeing the same thing pretty much with the NASDAQ 100 weekly chart. We're just above the resistance now. Will we break down, or will we be able to break above this level? We're also keeping an eye on a very high reading between the NASDAQ 100 and the Dow ratio. It ticked down a little bit, but when we got to these high levels before, that usually meant bad things for the market right after that. So we want to keep an eye on this. So what's our outlook for Wednesday? There will be a meeting on Wednesday with the Fed. Then on Thursday, it'll be the European Central Bank. And then on Friday will be the Bank of Japan. There will be lots of influential earnings reports that will be released that can have an impact on the market. The technicals are still positive, but we're showing a pretty significant overbought situation still. The economic reports coming out will be the weekly MBA mortgage index, new home sales, and then the FOMC decision will come out at 2 p.m. Eastern, and then the press conference will be at 2:30 p.m. Eastern. We're also keeping an eye on the geopolitical events, but right now all eyes are on the Fed. Here's the updated economic calendar so far for the week. Looking at the Stock Traders Almanac statistics, we're 50-50 for the week after options expiration, and we're neutral to positive with the Dow, S&P, and NASDAQ. We will be on the 17th trading day of the month, which is also the day the Fed's going to make their announcement. Sometimes after this day is when we can see some weakness going into the latter part of July. We're seeing that same thing when we look at the NASDAQ. There can often be some weakness. Now that's just historically what has happened in the past. So our scenarios, not really going with the downwind right now because our technicals are positive. However, we are overbought. Everything is still pointing up and looking pretty positive overall, but we are overbought. We're not going with the sideways trend right now because our ADX is suggesting that we are in a strong trending environment. So our warning signs, we're still wondering about this convergence of these short-term bearish signals. We're kind of leaving some of them behind now. It really didn't work out into all that much of a decline. The longer-term trend signals on the weekly charts, are we at a top? That could be signaling that we're there. So far, we're above that level. Can we stay above that level? Seasonally and historically, we're coming into a weak part of the month. The oscillators are starting to look a little bit more negative. First, they were diverging. Now the oscillators that we usually look at are starting to turn more negative. The NASDAQ 100 oscillator is also turning negative. The VIX is showing that there's just not a lot of fear in the market, and it's been that way for a while now. The cumulative new highs and new lows for the NASDAQ still are showing weakness. We're still above that 3-month yield where we were back in 2007 before the great financial crisis. The S&P growth, it's still in an uptrend, but it is weakening. And then earnings season are on a company-by-company basis. Our positive signs, we have seasonality and setups that remain in the background that I covered in the weekly video. Those are still there. The long-term daily special K chart is positive. The weekly chart, it's negative, but it is showing some improvement. The long-term equity put-call ratio continues to be positive. The S&P is above the downtrend channel upper line. We're still in a risk-on posture, even though that ratio took a bit of a hit on Tuesday. Lower price levels may provide support. We haven't really tested this all that much yet. If we get some wild swings on Wednesday, we'll have to see if some of these support levels continue to hold. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're still breaking out on those longer-term charts, but on the daily charts, they've hit upper pivot resistance and have not been able to break through that. The Staples to S&P 500 ratio is declining. The Russell and the small cap index, as well as the mid caps, have generated recent golden crosses. Small and mid cap growth continues to be positive. The Copic curve and now a new addition, the Pring bottom fisher, have generated buy signals. So our conclusion, the S&P, it's positive, but we are overbought, and we can say that in the short and intermediate term, and we're still positive in the long term. Have a really good day, and I will talk to you in the next video.